Well, crypto's been under the gun since early November, and now some are saying we could see one of those Bitcoin retracements, like those historic ones with the big prior drawdowns, which would mean a whole lot more pain. Now, keep this in mind. Drawdowns from peaks of 2011, 2013, and 2017 were 80% or more. So is this a pivotal moment? I think maybe we've got to make a stand here. I want to bring in the investing diva CEO Kiana Danial. And Kiana, Bitcoin this week, it held nicely at 33,000. I'm looking at the chart. I think 30,000 has got to hold, just purely technical. So how would this time be different, again, than 2017, 13, and 11? Do you think there's enough institutional buying, or something has changed that we don't need to go down 70 or 80%?
So very good to see you, Charles. And I think Bitcoin has historically just repeated the same pattern, or a similar, or somewhat resembling pattern over and over again. I don't think anything is different than before. I think Bitcoin's market price and volatility has been purely psychological, and when it drops, people panic sell. And of course, there's a trigger behind it at the beginning, a whale dumping, or some institutions and some of the headlines that have been coming out, and people start selling, and therefore the Bitcoin prices start dropping to the psychological levels that we're watching right now, $30,000, as you mentioned. It is a very, very strong sort of psychological level. I don't think it has quite bottomed out yet. I think we still have room for further drops before it goes back up. But again, long term, you know, my long-term view for Bitcoin, because of supply and demand, has always been bullish if you look at the big picture.
I want to talk to you about the democratization of crypto. There's a report out that says 94% of buyers are 18 to 40 years old, and yet work from Professor Scott Galloway says that 95% of Bitcoin is owned by just 2% of accounts. So does this sort of take away from the narrative that this is a way to escape, for younger folks to escape the grip of the establishment?
So here's the problem with this kind of reports, is that it's not taking into consideration that Bitcoin addresses are not the same as, are not typically just one account. Like sometimes this like a big exchange that has like millions and millions of users has the same address. So this analysis that, oh, only 2% of Bitcoin holders, like 95% of Bitcoin is held by 2%. This is misleading. It is not the truth. And the fact is that the reason why I personally invest in Bitcoin is specifically because I want to have my freedom as an individual. As you know, I was born and raised in Iran to a Jewish family. Before the revolution happened in Iran, my dad was very successful, was very rich. But what happened after the government was completely blown out, they went and seized all of her bank accounts, that are his assets that were basically regulated by the government that my dad used to trust. And if at the time something like Bitcoin existed, and my dad had some exposure to that Bitcoin, once the government went down, he would not have gone back down to rock bottom. So the reason why I diversify my account with Bitcoin is precisely because of that, because as an individual who lives in the land of the free, I want to have that freedom. You
know, it's interesting. Maybe that's why China is so afraid of it, and Russia and those kind of countries. By the way, speaking of governments, right, I've just read where the White House wants crypto to make rules about crypto as a matter of national security. So this government also seems to be very intimidated and trying any kind of way they can to stop this from becoming a big thing.
It kind of looks like it, and I hate to like put it as like a Democrat-Republican thing, because I don't think it should be, but you can see that this is something that, yes, they cannot manipulate. This is not like the Federal Reserve, that they can just go and print more money out of thin air and kind of have control over the market. This is something that is peer-to-peer, and that is international, that I can send money to the places that they may not want me to internationally. So then again, I mean, I'm going to have you to read between the lines, but I don't think this is something like an attack from China that we have to be worried about. This is something that is an individual choice, and I think that you need to have that freedom to choose.
Absolutely. It's been too long, Kiana. Great seeing you, and fantastic stuff. Appreciate it.
Thank you for having me.
All right, folks, I want you to check out this headline. Pittsburgh Bridge collapses hours before Biden infrastructure visit. At least 10 people sustained non-life-threatening injuries in the collapse, officials said. Well, thank goodness nobody was seriously hurt, but this makes for a great example of why America needs to spend money to shore up our infrastructure. Of course, President Biden will underscore that shortly in his pitch, but also he's going to pitch Build Back Better, which has been stalled for a long time, maybe derailed for good. I want to bring in Carol Roth. You know, Carol, according to the American Society of Civil Engineers, our infrastructure is a C-, and they say it's underfunded to the point of $2.6 trillion just in the last 10 years or so. Bridges, by the way, 42% are older than 50 years old. Almost 8% are structurally deficient. It would cost $125 billion alone to fix them. Here's the problem. We just passed an infrastructure bill, and not enough of it is infrastructure. So we're going to get a pitch that let's do this again and add a little bit more to it. I mean, isn't this an example of why we really should fix our bridges?
Yeah, I mean, this is unfortunately a multi-trillion, as you mentioned, dollar problem. The issue is that out of this $1 trillion that is quote unquote infrastructure, it's not for that infrastructure that you and I think of. When you think of the roads and bridges, they're allocating supposedly around $110 billion. So less than 10% of the total allocation to that. If you include airports and water ports, it's another $42 billion, but it's really a fraction of the overall spend. Most of it's going to pet projects. And then it's just a question of just the little crumbs that we did get. Will that be spent efficiently? I don't know about you, Charles, but I live here in Chicago. Anytime they go to repair a road, there's like 1 or 2 guys working for every 12 guys that are standing around. So, you know, is that really going to even move the needle for us? Unfortunately, I'm not super optimistic about that.
In New York, what always gets my attention, just for like any kind of simple job, you can see all of the different permits they tacked up on the wall. It's like 80,000 permits just to change the facade or something. And of course, we remember the last time they had the big infrastructure spend. Nothing was prepared. The states wasted the money, $1 trillion. So, hey, speaking of government spending, I think we're in a pickle, and I want to talk to you about this. So we learned that personal incomes were up 0.3% last month. That was the 3rd month in a row. But the problem is real wages, right? Real incomes were negative, adjusted for inflation. But here's the rub, Carol. Last year, government provided 22% of all personal income. How sustainable is that?
I mean, it's hopefully certainly not sustainable with this administration and Congress. Certainly anything's possible. But even if we get, a cooling of consumer spending because we don't have the government supporting it, unfortunately, I think consumers are still going to be in for a shock because we have such tightness in our labor market. We're going to end up potentially in an escalating wage price spiral where those who are going into the workforce are demanding higher wages, and that ends up getting passed along to the business, and the business passes it along to the consumer. So it may not be a consumer demand issue, but really a wage issue.
On the other thing, though, because there's still, talk that, every time these politicians talk, they say what's happening, you're going to watch a spike. Pretty soon we're going to get numbers up, for instance, on children living in poverty, and it will spike. Now, this is just an artificial number. It's a scam, right? Because it's just 26,500. If you're above it, you're out of poverty. If you're below it, you're in poverty. I think it's all poverty. But advocates say there's no alternative to this kind of government assistance. And you just brought up the fact that, well, how about 11 million jobs? Why aren't we somehow trying to say to people, you can't, no more? You know what? Or attach obligations to at least look for a job before you start giving away free money.
Yeah, and this is the frustrating part because all of the issues that we're seeing, from inflation to the supply chain disruption to these dislocations in the labor market, were caused by central planning. And the thought that more central planning is going to fix it is a huge issue. Certainly for the individual, there are plenty of jobs that should be able to fix it. We need central planners to get out of the way. But then there are these long-term structural problems that we have in the labor force that the central planners have incurred. The 3 million boomers who prematurely retired, the fact that we're sort of 2 million legal immigrants under trend in terms of where we should be at this point had these decisions not happened. And then, as you and I have talked about before, things like the anti-work movement. And I just don't know, even if we get the government out of the way, unless they make it easier for small businesses to hire and businesses to hire more, if we're going to fix this structural problem anytime soon.
Yeah, it does. It is a problem, and it's reflected in our economy and in the markets these days. Carol, thank you so much. Appreciate it.